Welcome to the Traders Expo 2017, New York City. I'm Matt McCall, joined by Jeff Kilburg, CEO of KKM Financial. Jeff, thanks for joining us here today.
Matt, wonderful to be here.
All right, we got you in here now. We've had one of the most amazing short-term bull market rallies after this election. And I know you're on CNBC a lot. I see you on TV, and I get my little app, right? The CNBC app.
Yep.
And every 3 days, market down, Trump rally over.
New
I've been
all-time
hearing
high.
this forever. But so tell me what's really going on. Is it the new all-time highs, or is this Trump rally really getting old?
Well, I think it is a little long in the tooth, no doubt about it, but I think there's been a sentiment change. You've seen a lot of the bearish sentiment in 2016 going into the election. You've seen it flushed out. And right now, it's been 100 days, Matt, since we've actually seen a 1% move in the S&P 500, but it's this slow tick, this grind higher. And I think the bullish sentiment, obviously we are waiting to see the implementation of some of this tax reform, some of this infrastructure spending, to see if that rubber really meets the road. But the bearish sentiment has been flushed out, and the bears certainly have been put in the hurt locker for the last 300 or 400 S&P 500 handles.
Yeah. So what are the bears doing now? Are they in a situation where they're waiting for some type of event to turn the market over? Or are they just kind of sitting back and we're having a slow grind higher like you mentioned?
Well, I think that's a great point, and you're seeing it in the markets. It's a true tell. Every time you see the S&P 500 open up 7, 8, 9 handles lower, it's bought. It's bought viciously. And you're seeing the closes. And we always like to, as traders there, and there's a great vibe here, folks, right now at this Trader Expo 2017. We're going to talk a lot of technicals, a lot of different things, but you're seeing the closes at 3 o'clock Chicago time. You're seeing that euphoria, the highs of the day. It'll get stuck in a range all day, and then all of a sudden they take it higher. So it is a new normal. It is abnormal, but it is the reality right now. We're in the market. So we're really bracing in and trying to be focused as the last of the bears are being killed off.
So then when you have that buying at the end of the day, especially going into long weekends, we've seen that happen. That tells me people do not want to be on the sidelines. They want to be in the market. So are they really that nervous? Because people I talk to seem nervous, but they keep buying into the close.
Well, I think it's a certain aspect that's actually chasing this market. A lot of folks are trying to wait for this volatility. And keep in mind, we've seen such suppression and volatility. You have seen the S&P 500 not have a down move of 1% in nearly 50 days. And the last time we've seen that, it's been quite some time. So I think you're seeing certain factions and certain investors come into the market, but a lot of people are just sitting on their heels, trying to keep their powder dry, waiting for that shoe to drop, potentially out of Washington, D.C.
So what do you think? Okay, so as my next question kind of set me up there. What would be that?
That's my job. That's what I'm supposed to do, Matt.
Would it be out of DC? Is that where you're thinking that would come from?
You know, I think what's interesting, and I talked to John and Jerry and Scotty Martin, Jimmy Uriel, all the folks here today. We talk a lot about this. It seems like the market is currently discounting all the rhetoric. Some of that rhetoric when they called out Germany, right? We saw Navarro, Trump's top trade advisor, call out Germany for being a currency manipulator. It doesn't even seem to affect. So right now, the market is pricing in perfection all of Trump's policies. So until that rhetoric, until some of these other components actually get digested and taken into the market, I think we're okay right now to go up a little bit higher and continue to grind.
So I'm going to go on a limb here. You sound to be a bit bullish. Is that?
I am long-term bullish, and I think when you see this tax reform come in, this infrastructure spending, potentially this repatriation, which could be tagged to some type of capital expenditure for all these companies, I am long-term bullish, but I am really waiting for the other shoe to drop. Maybe this implementation of this tax policy doesn't hit until 2018, and therefore you should see volatility come back into the market, and it could get a little choppy, and that's why we're talking about options today and how to really protect your portfolio going into that volatility.
So we're going to take a break here. We're going to go to options next time, but before we wrap it up right now, for the traders out there, there's a lot of people on the sidelines. Do they go into the market now, or do they wait for that shoe to drop and buy into pullbacks?
Well, I'm going to answer it two ways. If you're currently in the market, I think you need to utilize options, protect your downside, mitigate that risk. If you're looking to get into it, I think there's a better way to just buy in the market. You can always use a put strategy. Find some of those names you really like, get paid, and have the market come to you. So I think it's a double-edged sword you have to be very careful of right now.
Okay, we're going to get to that in a moment. Jeff Kilburg, CEO, KKM Financial, thank you for joining us here, coming to you live from the Traders Expo 2017.